What's going on, guys? Today I have another exciting video for you. We are going to be talking about Alibaba stock, and specifically we are going to take a dive into their earnings. There's been a lot of concern with Alibaba's earnings recently. Obviously, over the last year, they've suffered a lot from a number of different things, and a lot of those things are starting to turn around, or at least have glimpses of hope going forward. So we are going to jump into all of that, take a real close look at their earnings, and then we're going to end off the video by taking a look at some price predictions based off their EPS and also based off what analysts are thinking. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Over the last couple of weeks, Alibaba has hit a new low of $58.01. Since then, though, the stock market and Alibaba and China in general has kind of spiked up a little bit. We have seen the stock rebound. We can see it went all the way down here to $64.83, and then it had a sharp move up and moved kind of continually up throughout the week. Over the last month, they're still down 6.5%. Last 6 months, down 12.73%, and they kind of spiked up here in July and got to a price of $122, $123, kind of somewhere in that range. And then over the last year, they are actually down 57.57%. And over the last 5 years, down 61.77%. And we can see they topped out here around $310. So a lot of downward movement for Alibaba stock. I want to start off the video by touching on something that I spoke to in a separate video. About a week ago, I published a video about this, and that is China potentially reopening their economy. And as the week has gone on, more and more of those rumors have came out and kind of continued to be confirmed by different sources. And basically, China is expected to reopen its international business and travel at some point in the near future, as well as other parts of their economy. They're also expected to basically reduce their zero pandemic policy and basically start pulling back some of those restrictions that they've put on the businesses, on the economy, that have overall hurt a lot of the companies there in China. With all of those restrictions, we've seen the economy in China basically degrade significantly over the last couple of years. And a lot of that, has come from obviously those restrictions, but there's a number of other things that have also affected Alibaba and other Chinese companies. Specifically, obviously, the Chinese companies potentially being delisted in the US. What we've seen over the last couple of months, though, is that the Chinese government and the US government have basically come to an agreement where the US auditing firms can now go into China and under supervision of Chinese officials basically look at some of the books for companies. Alibaba is one of the first companies that's actually getting audited, and by the end of the year we're expected to have results on those audits and basically figure out whether Alibaba is going to be able to stay listed in the US or not. So that's going to be obviously a huge moving point. If we get positive feedback from the SEC that Alibaba is able to stay listed, that's going to be a big move up for all Chinese stocks across the US market. The other thing that we've seen over the last year that's really impacted earnings is a lot of fines and different things, restrictions coming in from the Chinese government. They've had a big crackdown on a lot of tech firms across China, and this has obviously had a very negative impact on a lot of those businesses. This article I found interesting because they actually comment here and say Alibaba's core e-commerce business and online retail businesses won't necessarily be directly affected by China reopening, which is something investors may want to be mindful of. Personally, I actually disagree with this statement. Obviously, they're saying it won't directly affect China or affect the businesses by reopening China. They're kind of right and kind of wrong, because basically if you reopen a lot of portions of China, there's going to be more people who are able to basically hold down their restaurant jobs, hold down whatever job they might have that is restricted by these restrictions that the Chinese government puts in place when they shut down large areas of the country. And when those people are able to hold down their job, make money, and have more disposable income, thus they are going to be able to have more money to spend on online retailers like Alibaba, e-commerce business, and whatnot. So that overall is going to have a huge positive impact on the economy, on top top of that, you have the housing crisis that's going on in China. More people with more income because the economy is open, again, will help resolve some of those issues. China has also dropped their interest rates, which is going to obviously have a good impact on their economy as well, similar to kind of what we saw over the last couple of years with the US economy. Hopefully, China doesn't go too far down the rabbit hole where they end up with high inflation like the US did, but that's certainly a possibility. And then the other thing kind of listed here is that China is sitting at such a low PE ratio. So Alibaba specifically is sitting at 11.4, but the Chinese economy in general, a lot of their tech sector has been really suppressed in terms of what people are willing to pay for their earnings, because there's a lot of speculation right now whether China is going to, keep restricting tech firms, or if they're going to open up, or if these companies are going to be delisted. So a lot of that has been priced into the market, and we're starting to see, again, a lot of glimmers of hope with reopening China, less restrictions on tech, lowering of interest rates, just a lot of positive things out of China that kind of, in my opinion, show the turning of a corner for the Chinese economy. So with all of that said, we have some Yahoo Finance data here to go over and look at and come up with valuations and potential price targets for Alibaba stock. And what we have is 35 analysts covering 2024. So specifically, we're going to look at next year's earnings. The current year, they're projected $7.22 of earnings. And basically for next year, they're expecting that to increase by a little over $1 to $8.42 as the middle ground. The low estimate is $5.82. That, in my opinion, that would be basically China mismanaging the entire economy, a whole new pandemic coming up, and basically them, shutting down the entire economy for months and months and months to be able to get down to that number, because that's even a decrease from what we've seen this year, which is obviously fairly significant. I mean, I think they'd also have to throw more restrictions and fines on tech companies for them to get down to that dollar value. And then we have a high of $10.35. Personally, I think they'll probably sit somewhere just over this estimate, maybe anywhere from $8.50 to $9. I think that would be a very good positive impact for China, especially because I'm kind of anticipating that China could actually start putting some sort of stimulus in place and trying to re-stimulate their economy and get back to growth, because a lot of investors expect a lot of growth out of China, and China over the last year to 2 years has really gone away from growth, and their GDP growth has actually been very, very low, which has concerned a lot of investors. So let's hop over and take a look at what these EPSs would mean for the stock price. What we have here is, again, a layout of each of those earning estimates, so the low, the middle, and the high. And what we can do based off their current price is figure out what the PE ratio would be. So here's basically what that's looking like, right? We're taking the price divided by their earnings to get a PE ratio. And if they come in at this very low number, which again, I think is unreasonable, I think there would have to be a lot of things to go wrong to end up with an earnings of $5.82. They would be at a PE ratio of 12.16. If they come in the middle, they would be at 8.4. And if they come in at the high, they would be at 6.84. So again, I think they'll be somewhere kind of around this number, if not slightly higher. So I'm kind of estimating that they could be around a 7 to a 7.5 PE ratio. So what we can do is we can plug that in here, and we can basically say, okay, we can run a ratio, and if we see that potential PE ratio go up to 12 or 20, we can come up with price targets based off that. And the reason I have 12 in here is that's basically what we have seen over here from their forward PE ratio over the last year. We've seen them sit around a 12. Again, I think a lot of that is because of a lot of negativity being priced into the market, basically investor sentiment being at a very low point for Alibaba stock, so it's traded at a very low valuation. But even if we're conservative like that and we put a 12 PE ratio in as potentially where the stock could be priced at, we would see the stock price move up to $113.23, which would be a 60% move up from where it's sitting at right now. So overall, that would be an awesome move. And then here, if it actually gets valued, where I'd kind of expect it to be, and this is even on the low end of where I'd expect it to be, I'd expect Alibaba to trade more around like a 25 PE ratio, in all honesty, especially if they get back to a little bit of growth. But if they go to a 20, we would see the stock trade all the way up to $188.72, which would be 166.67% return based off its current price in the market. And these numbers are fairly in line with what analysts have expected and expect from the stock. So they have a price target right now of $159.46. So if we actually come over here and we plug that number in, that falls kind of between our two numbers. So they're kind of pricing it in maybe around an 18 P ratio. And basically what that comes out to would be 125.32% return for the stock. With all that said, guys, I personally do own a large portion of Alibaba, so I have a little bit of a biased opinion, but obviously do your own research. Take your own time to analyze the stock. Something I haven't even got into in this video is we saw the inflation data obviously come out over the last week, and that obviously had a positive impact on the market overall. And in my opinion, if that opens the door for the Fed to loosen up some of their increases on interest rates, that could have a huge impact on companies like Alibaba as well. Alibaba right now is seen as a lot more speculative stock, and with that, that means that money is, basically a little bit, when it's tighter, people are not going to invest as heavily into companies that are more speculative. They're a little bit more conservative. So with the cash that they do have. So if we see that kind of reverse over the next year or so, I think that's going to have a huge impact on stocks like Alibaba and other speculative stocks throughout the stock market. And then the other big thing is over the next, year or two, that obviously we want to see Alibaba stay listed. That's going to be huge. If they can pass a lot of these audits over the next, couple months, and the SEC signs off on them staying listed and not delisting the company, that will be absolutely massive for the company moving forward. Because I think over the next 3 to 5 years, they're going to really start turning around their earnings and become a high earning, high growth company like they were over the last kind of couple years back in 2019. And even early 2020. So that's just my opinion. Obviously, do your own research. Don't take advice from someone on the internet, just on YouTube. Look into the stocks. If you like the stock, buy the stock. If you don't like the stock, don't buy the stock. But overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.